Hello and welcome to today's This Week in Review. This is Sunday, September 1st, 2024. We're going to look at what happened this previous week, summarize it, and looking forward to that. So let's start out with something that I just realized is that I'm looking at the companies in our economy, in our market that generate the most cash flows. And number one is Goldman Sachs, $143 billion a year. So, and number two is JP Morgan Chase at 87 billion, Apple 84, Alphabet 69, Microsoft 52, Meta 43 billion, Wells Fargo 34 billion. And because Wells Fargo was a prize for me, I think I will do my first analytical research report on Wells Fargo, which will come out next month. So I'll target that. And then Amazon is at 32. Berkshire Hathaway's at the B fund, BRK.B is at 29 billion. Nvidia, the microchip company, is at 26 billion. Exxon Mobil is at 18.5 billion. Capital One is at 18.4. AT&T is at $12.3 billion. So Comcast at 11.4 billion. So these are companies that are in the market that, do well. They generate cash flows. So that's an important thing to think about when we invest in bank stocks. We want to look at this. They want to look at the cash flows and look at companies that are generating the highest cash flows, positive cash flows. So let's go on to the next area. Looking at sectors, this is as of Friday. Most of the sectors were up on Friday. I think we can say that this last week was a rebound from the previous week, and so most areas were doing better. If we look at our defensive stocks, and as expected, most of those stocks were up. So again, in a late expansion phase or a mid expansion phase in the economy business cycle, there are certain industries that do better than others statistically. And so in the late cycle and recession, we want to look at companies that will do well no matter what's going on in the economy. So utilities, consumer staples, like grocery stores, food companies. All right. In the banking industry, this last week, money center banks are doing just fine. They're in the top quartile. Again, I want to look at Wells Fargo um, this month in September, and I will do my first analytical research report on them because they were surprised to me. I noticed that they were cash flow wise, they were doing better. They were the third best out of the six large money center banks in America. Looking at diversified banks, that includes insurance companies, etc. That's a mixed bag this week. I believe the companies that weren't doing as well were more like insurance companies, PayPal. Interesting to note that Berkshire Hathaway's the A fund was up $12,000 on Friday, almost $13,000. So that's you don't see that very often, but I guess when you're looking at a stock that's priced at $715,000 a share, I guess that is more commonplace than we think. Although that was almost 2% increase. Just looking at banks, focus mostly on banks, the bigger banks, and the vendors that provide services to the banking industry. Again, those had a good day on Friday. So we're going to finish off today's this week in review uh, concerning the Federal Reserve's finalization of the requirement for the larger banks for the stress capital buffer. So for capital requirements, certain levels that are required. And then some of the banks, the bigger banks in particular, are required to pay additional are required to reserve additional capital to account for um, the potential for additional risks from their operations, but also because of their uniqueness to the economy. So, and I believe that's what the stress buffer capital requirement is. And so they finalized it for the money center banks in America. And um, so next time they report, which I think is October, they'll have to account for that. All right, so that's our look at what's happened this last week. Again, we covered the stock market. We focused on banking. We looked at the different sectors and where we might find some um, benefit where they invest during this time in the business cycle. And so we're looking forward to what's going to happen here in a few weeks with the Federal Reserve when they make their decision on the rate cut and how much. And then finally, the largest banks in America they know now how much capital they're going to have to account for. So it's been a joy and a pleasure. I look forward to speaking with you again next week. Look for my quarterly acquisition bank targets to come out. Should be coming out this week, and I will be charging I think $15.98 for that, $15.99. And so that'll come out once a quarter. I provide 5 banks that I've analyzed and that I think are at different levels of potential acquisition, either from a bank investor's perspective or from a bank manager who's a bank that's looking to grow in assets wise and expand. And then also, if you're a fund manager and you're looking for banks that to invest in that have a potential upside. So that's what that's all about. And then later on in the month here in a few more weeks, I'll have my analysis completed for, and I'm going to look at Wells Fargo. So at Wells Fargo Bank, I'll analyze it for its risk profile. So I'll look at things like capital, earnings, liquidity, rate sensitivity, and asset quality. And we'll look at those trends. And we'll give a valuation, estimated evaluation based on finance theory. And then lastly, we'll come up with some returns. What's the return on assets, return on equity after you account for risk? And so there'll be risk adjusted returns. So look forward to that report. That report it's going to be $25 plus a processing fee. So that'll be available in the later half of September. So if you have any questions, go ahead and give me a call at my phone number. Just look me up either on LinkedIn or on Facebook or at the website, CJLQuantumanalytics.com. And we can provide additional assistance, guidance. I do consulting work as well. I'm available for that. Be more than happy to get dressed up and come to a board meeting or do it virtually, via video conference, and provide some guidance and background and more information about what's going on with your bank from an interest rate risk perspective, asset liability perspective, and also ways to improve profitability from a net interest margin perspective. So thank you again, and I look forward to speaking with you again next week on our podcast. Thank you. Bye-bye.